Hey everybody, it's Amy Knight with Knight CPA Group. Welcome. It's noon Central Time. We're going to get rolling on this webcast that we've got scheduled for the update on the December COVID bill. And I'll tell you, like I was just typing more info. Actually, let me get back to slide number one. There's just still so much changes going on. I haven't even shared my screen yet. I'll get that done while we let everybody hop on. So I'm going to just say right now, this is not going to be my most organized webcast ever. My slides could be better. I finally quit trying to study what all was going to be in it so that I could just get the slides together. All right, I need to know if we have can somebody put in chat if you can see my screen? Pretty please. And it should not say PPP Round Two. It should say Knight CPA Group and have our Wednesday Webcast. Okay, thanks guys. I got some familiar names on. Hi John. Hi Bob. Steve, Shula. All right. I see you. I see you too. Okay, I wish I could see everybody. It'd be so much better, but I did just kick one of the dogs out because she was just barking way too much and she's got a loud bark. So again, just letting everybody jump on board real quick. And then I'll go through some housekeeping rules and we'll get going. So I'll say on my other screen, somebody just shared a presentation that was done by a Texas CPA group, like Texas Board of CPAs or somebody. Anyways, I've got their presentation up. I was just seeing what I could add and anything new there. Chat. Okay, Q&A. Let me get my Q&A panel up. All right. All right, looks like we've got people have kind of stabilized from, you just see the number of attendees jump as people jump on board. So let's get rolling. First, a couple of housekeeping notes. We ordered lunch and it just arrived, so I have not eaten. I ate a bar and I'll be starving in a little while. So there's that. If I get grumpy, that's why. I do have the AC turned down nice and cold, so hopefully if any hot flashes hit me, I'm okay. If you have questions, please put them in the Q&A panel because that is where I can see them and track them and answer them and know that I get everybody answered. You're going to have a lot of questions that I'm just not probably going to be able to answer because we just don't know. So bear with us. The reason why I kind of rushed to do this is because our offices are closed Christmas to New Year's. And so I didn't want to leave everybody hanging. So I wanted to get some information out as soon as we could. And honestly, we all thought it would be signed and finalized by now, but it's not. So let's just jump into that and kind of see so I can catch you all up on what's going on. So I'm going to start with the miscellaneous items that are in this act. So first of all, a little background. So a few months ago, Congress was working on putting together legislation for additional COVID stimulus relief, and then it got stymied in the elections and blah, 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 all that, right? So now they get back on it. And so we got word, when I say we, I started seeing it come through the news in my CPA group, probably Thursday, Friday last week. So they were really working on it. They were coming to, yes, Rose, I will address what Trump's delays are. So I'm going to do that right now. So they were working on it and it was said they were very close to agreeing. They were going to stay over the weekend until they agreed. They did that. They came into agreement. Both sides, the Democrats, Republicans, Senate, House, everybody said, okay, we're good to go. And so then they voted on it. I want to say the House voted on Sunday. And then I think Senate voted Monday and they all vote. And Trump had already said, yeah, once it's voted, I'll sign it, right? We're going to get this out, get it done quick. Well, and I don't know what's right? Because who knows, right? I don't know what's right. What I know is the bill itself is 5,593 pages long. Like that's more than a full box of paper, right? I don't even have enough paper in my office to print it if I wanted to. So we start like, how do you even go through that? Even skimming now. So anyways, it comes out, we start skimming through it. It does have a lot of junk in there. Well, at the same time, if you remember, the government budget ran out. And so they had to, again, I'm not a political science person, but they had to like fix, like extend the government so the government didn't shut down. So part of it was part of the news was saying that this was so long because it includes the federal government budget. But then I've heard opposite that that's not true. So I'm not sure what's right. I mean, I feel like it has to include the federal government budget if it's that long. For perspective, the first CARES Act was 880 something pages. So 5,600, 800, yeah, quite different. And also when you go in there, it's saying all these huge amounts that are allocated to each and all these different departments. So I don't know what's right. Based on Trump's response makes me think that it's not, the budget isn't in, the federal budget isn't in there. It is all supposed to just be stimulus, recovery act. So what's in there? What we boiled down is about 500 pages actually addresses COVID relief. It's 300 pages that addresses it to general businesses, small businesses, and individual. And then you've got another couple hundred that's HHS specific, so for us. So that's what I zeroed in on. So I want to, and so then seriously, y'all, I'm here last night. It's been a busy week. It's always busy right before Christmas. And I'm typing up my slides. I'd already called home, said, hey, I'm going to be late because I've got to get these slides ready. So I'm going through, I'm typing up my slides, and I get this little ping on my watch from Fox News alert. And it says, Trump refuses to sign bill. And I just started yelling, not like yelling, but hollering because Paul was on the other side of the office. So that was at about 7 o'clock last night, I think. And then Paul was on the phone with a client. So, they always hear me hollering, and I apologize, you guys. I don't have very good control. So what his holdup is, and he made an address, it's on Twitter. It's about 4.5 minutes long. And he basically says, look, you're only given $600 to individuals, $600 to individual people. And I'll get into that with, who qualifies, who doesn't. But you're given millions and billions to all these foreign countries. And he lists them out. And, there's like 1.3 billion going to Egypt. And there's like some gender study for like Pakistan and just some crazy stuff. I'm not here to talk about all that because I didn't look at it. I didn't pay attention to all that, right? It didn't apply. And he's right. It's all in there. He said, and then you're only giving the American people $600. Like, this is ludicrous. And I'm not signing it until you get rid of all that crap and you give the American people $2,000. So I heard that they kind of agreed with the 2,000. Where it's at right now is that there's chatter that Trump will sign it as is, and then there will be an amendment to change 600 to 2,000. But we don't know yet. And he still hasn't signed anything yet. So that's Trump kind of playing hardball. There's been lots of criticism, both sides about it, all people, everybody, no matter how you vote or whatever. So that's kind of the Trump deal. That's what's going on. So I went ahead and still kept going through. I said, well, if that changes, that's just one line item on my presentation. I put a question mark by it. I didn't really update it because we don't know yet if it's really going to change. Okay, I might have turned down the AC a little bit too much. So let me just throw a jacket on. I'm shivering over here. So I thought it might be best. Let me just address some of these miscellaneous items. And I'm going to say I didn't put everything in here. We don't do a ton of individual tax. There are some individual tax provisions that everything in here is helpful. I will say that. That's the good thing. Like, to me, everything is good news. None of it's like bad news. So that's cool, right? So let's just dive into it. So I wanted to start with the stimulus payment. So what it currently says is $600 per individual, including qualifying children. And that could be changing to $2,000 per individual. Now, there is a phase out of this. There was a phase out the first time around, but they actually, this is the only kind of negative. They did lower the amount of money before they start phasing it out. I think last time it was at 100,000. This time it's at 75,000. So phase out begins for single at 75,000, for married at 150. It's fully phased out at 87 and 174. So if you make more money than that, you're not going to get a stimulus check. These checks are supposed to be coming out in the coming weeks, like very soon is what they're saying. And then it is an advance of a credit that you're going to get in your 2020 tax return. And so it's not, because I was a little worried the way I was reading that. It's not an advance of what your normal refund would be. You're not going to owe it back. And I can go a little bit further. There is no repayment required if what you received earlier, I guess there was some concern that some people received payments that shouldn't have, or they received more than they should have, because it was based on their 2018 income and because that's all that was filed at the time. They were just trying to get money out to people. Then when they filed their 2019 tax return, they really didn't qualify. They made too much money. They did come out and say, we're not going to recoup that. So if you fell into that category, you're good. Other provisions, that employee, which I came out and strongly advised against using or allowing, but the employee tax deferral, so where the employee could elect that they did not want to defer, that they didn't want to pay their taxes, and then their tax withholding would double in first quarter, that's been extended. And so they don't have to start paying it back in April 30th, they start paying it back. I think it's got to be paid back by the end of, it was originally going to be paid back by the end of April. Now it's to be paid back by the end of December 31st, 2021. Again, especially now that we know how that is being handled, just a little side note, if you elected to let your employee do that, here's how it works. You're going to file a W-2 based on what was actually withheld for 2020. Then when you recoup the amounts that should have been withheld, you then have to go file an amended W-2. So have fun with that. We all thought it was a bad idea from the get-go. So anyways, that's been extended. The Family First Coronavirus Response Act credits, so that FFCRA, that was that emergency paid sick leave was the big one. Those have been extended. So if you have people that are having to quarantine or stay home, or even stay home and take care of a sick child, all of that, instead of ending on 12/31, it's been extended to 3/31 of next year. This is by far my favorite. Now, here's what I don't know. It clearly says it's 100% deduction for meals. So like meals and entertainment, but meals specifically. But it's only it says for 2021, 2022. So I'm not sure that applies for 2020. We're going to need some clarification on that. But those are typically limited to 50%. And basically they're trying to get everybody to go out and eat. I know even myself, and I've not been one to stay cooped up, we just haven't eaten out near as much at home. But I will tell you, at the office, I've ordered DoorDash pretty much every day. So we are doing our fair share. And then also, I didn't get a whole lot of this on here, but unemployment, an additional $300 per week extended through mid-March. And I was reading in this other presentation, I think it begins December 26th for another 11 weeks, which then puts it through like March 14th or something like that. It's pretty close. Let's see. This is kind of big news. And again, please don't ask me any detailed questions because I don't know yet, because I did not study this in the first go around, because if you got a PPP loan, you were disqualified from taking this employee retention credit. Well, they removed that they removed that. So now if PPP borrowers are now eligible to also take this employee retention credit. And it's a credit where and they've increased it. They're really incentivizing employers to retain employees. Part of it is because of the PPP loans expiring. Your covered period is over. You've met your obligation of keeping everybody on staff, keeping that FTE count, and now you're letting people go. Well, here's a reason why to keep them. You get a credit. It's been extended through July 1st of next year. You get a credit, I think, of 70% of their wages. You get credited back to you. I think it's on the 941 form, your payroll tax form. And it's increased from $10,000 for an employee in total to $10,000 per quarter per employee. You do have to have less than 500 employees. Now, here's a kicker. You do have to show a 20% drop in our revenue quarter over quarter. And what this quote quarter over quarter means, because it's going to be applicable later, that is like first quarter 19 versus first quarter 20, or second quarter 19 versus second quarter 20. So it's a quarter over quarter comparison. And later on, you get to pick which quarter. I don't know the detail on that. Is it first quarter? Is it second quarter? Do you get to pick a quarter? I'm not sure. I'd have to dig into those details. Again, PPP borrowers can now take advantage of this credit. However, any wages paid under this, you do not get to include those in your PPP loan forgiveness calculation. So be careful there. If you recall back in the summer, the SBA, if you had a traditional SBA loan, the SBA came in and made the payment for you. So you were probably on auto draft and they quit drafting your payment, but yet on your amortization schedule, the payment kept being made. They're going to do that for 3 more months. So that's a positive, and none of it is taxable income. I'm not even sure how we're going to book that in accounting records yet. Again, we'll get it figured out. This doesn't apply to us, but I went ahead and put it in there because A, I'm in the live music capital of the world, Austin, but B, in case anybody has a related one, they did put in some pretty aggressive relief for live venue operations. You've got to show 25% reduction in revenue, but there's a lot of money out there for those people. So if you have one as a side business or another business, or you have friends, be sure they know to look for that. And then they're also doing these initial grants. And I'm sorry, this isn't very clear. This last bullet point, initial grants of 40% of gross revenues earned, that is for live venues. So it's kind of like live music venues. And I'm sorry, I'm not very clear on that. Now, one question that didn't get asked, that usually is asked, I am recording this. It will be on YouTube later this afternoon. And I will also have a link to the slides, not that they're fabulous, but they're there. And so you will get a follow-up email tomorrow that has a link to the video and a link to the slides. So those will be coming. Here is the big news, you guys. I just want to say Merry Christmas, Happy Hanukkah, Happy Holidays. They finally fixed the PPP loan expenses not being deductible. I'm going to just use layman's term and say PPP loan, is no longer taxable, right? Forgiveness is not taxable. And that was never how it was actually worded by the IRS. So I don't want another CPA calling me out saying, well, it wasn't really recognized as income. I know the expenses were not deductible, therefore it was taxable. It is no longer taxable. What I like in this provision is that this little quote here is not the only quote. They said it over and over. And Bob, you'll have to tell me what you think. I feel like the way they mentioned it over and over, if you read it, it says, basically they're telling the IRS, look, don't even try to come back with some other backdoor way to make this taxable. It's not taxable. So I think this is here to stay. I think it's solid. If you by chance already made like an estimated tax payment and you included tax on this, it's going to come out in the wash when we do the tax return, or it can be rolled forward to next year. Don't worry. Merlita, ERC was that employee retention credit is what that was. All right. So Wendy is asking, if the loan is not forgiven until 2021, do we keep it as a liability in 2020? My answer to that is yes. That's what we will be doing. On the books, I think we'll leave it as, I don't know if that's what we're going to do, but I think it's a completely legitimate accounting process. We may go ahead and say, if we are 100% confident or if we're 90% confident it's going to be forgiven, we may go ahead and recognize that in 2020 just to get it all behind us. I'm not sure what we're going to do internally yet. Either approach I think works just fine. So this is a big deal, you guys. I've been very conservative on this, and I felt it was much better to assume it was going to be taxable until they said it was not, which is what we did internally. But them fixing this is huge, I think, for everybody. So that's going to save everybody a lot of tax dollars. In other PPP news, this gets a little confusing, and I'm not very clear about it here in my rushed together slides. I apologize. With PPP, there is now a round 2, but they've also reopened it with another $35 billion that's available for anybody, and I might not even have that worded right. Forget about how much is available. They're reopening it. If you applied for a PPP loan, and I agree, provided he signs. Okay. If you applied for a PPP loan and got it and then returned it, you got cold feet, you didn't feel like you had the necessity requirement that kind of came into question. If you've already applied, they've reopened that. You can now apply again, or let's say you applied, you used it, but you could only meet spending for 8 weeks and you gave some back. And now the rules have changed to where you're like, I wish I'd have kept that because I could have spent it under the new rules. If that's the case, you can go back and reapply to then get what you would have gotten, the maximum you would have gotten under the rules as they are now. So there are some new allowed expenses that we'll get to. And so that's one way that for existing borrowers or people that have already applied, it's reopened for you. Then for those that have not applied at all, there is a round, I'm saying that wrong. The round 2 are for those that have applied, received, and spent all of their funds. You can go back for a second round. So let's get into that in just a second. They are doing a streamlined forgiveness application for loans under $150,000. This tells me that I'm not going to keep waiting on blanket forgiveness for anything under $150,000. We didn't really wait for clients. If clients wanted it filed, we've been filing the application for them. But we're just going to move forward and get them all filed. Now, the catch is it's a simplified form and it's one page. However, you're still required to do all the calculations, all the attestations, everything else of the longer form. So kind of what I'm hearing and what we agree with is that you fill out the longer form, at least the EZ form. That's what we've been doing. And you document everything there. You have all the supporting work papers and then submit just the one pager, but you need to fill out the others to prove up that everything works. And then there has been good clarification because some super OCD CPAs were saying it says 8 weeks or 24 weeks, but nothing in between. They did come in and say you can pick any period between 8 weeks and 24 weeks. So that's good clarification. So I've got Frank asking, are the PPP loan forgiveness applications still due by 12/31? No, that rule was changed a long time ago, that forgiveness applications are due 10 months from the end of your covered period. So you need to figure out what that was. So let's say and I'm not going to use proper dates, but if you got your money in May and you counted and you did 12 weeks and that was 3 months later, is August 31st was the end of your 12-week period, then you're going to go 10 months from the end, so 8/31, 10 months past that, that's when it's due, Frank. So that's been kind of misunderstood for a little while. If we haven't applied for PP loan forgiveness yet, does it affect in any way our round 2 application? Good question, Raul. Now, there are some restrictions that I think some home care and hospice providers probably are not going to, I think a lot of our audience will not qualify for a second round, but the way they did it, you might. So I'll get to that. But if you haven't filed your application yet, no, that does not affect it. I think you're still able to go ahead and apply for round 2 if you qualify. I see some questions in chat. Where do we download the application? Yeah, Merlita, that's a great question. I don't even know yet where the second round application is. I would guess it is on the SBA website. That's a good question. I haven't even looked. And so let me see what's next on my slides. So let's go through what new expenses are now allowed. Dogs are barking outside the office. They're not in here. And Rudy's in here, but she's old. She's 14. She can't hear very good, so she's sleeping. She doesn't even know they're barking. Okay, new expenses allowed. These are a little bit vague. It reminds me of HHS, Provider Relief Fund expenses, but operation expenditures, and this is verbatim. Well, I say it's verbatim. I think it is. Payments for business software, cloud computing, anything that facilitated you in making the move to remote and also still to continue to deliver care. But it clearly states payroll. It states billing. So I'm thinking your payroll processing fees, and because that's a software fee, part of it is depending on how you do it. And then also your EMR, right? So that is now, because that's one that everybody kept saying, can we deduct our, not deduct, but include EMR software billing subscription as part of that. And so now it's saying, yes, you can, and HR. And it says, and accounting. So I like accounting software, like QuickBooks, or accounting fees, like my fees. I don't, again, we don't know detail on that. Being honest, in our industry, everybody, I think every application we have filed for forgiveness has been 100% payroll. But these are new additional expenses. Property damage, I found this one very, very interesting. Property damage, so any costs related to property damage due to public disturbances in 2020 not covered by insurance. So if there was a riot in your town and they tore up your storefront, I found that very interesting. Supplier costs, and these are suppliers of goods that are essential to operations of the entity and made pursuant to a contract that was either in effect before your cover period, or if it was perishable goods, in effect during the cover period. I think PPE falls under this. So all of your personal protective equipment, I think now is an allowable expense. Again, this is a little bit of a moot point because, you know, unless your business dropped dramatically, most of you have been able to cover it all just using payroll cost. Exactly. Here's also PPE, covered worker protection. So if you had to, you know, and think about office staff, they're not using PPE, but you put up plexiglass dividers and things like that. You know, renovations that you might have done to your office are now, not only are they HHS allowed, but they're also PPP loan allowed as forgivable expenses. Okay. Can add these if not already applied for forgiveness. If you've already applied for forgiveness and you spent all your money on payroll, don't try to go back and add these. But if you haven't applied and you need help justifying all of your expenses, then by all means add them. Okay, so here is PPP Loan Round Two. If you've already received it and fully used your original proceeds, so you've got to have fully spent what you already received. You don't have to have applied for forgiveness. And you guys are going to get into some detailed questions on this. I can already anticipate them, and I don't know the answer. But you can apply for this round two. So here's the calculation. It's the same as before, 2.5 times payroll. I think actually it states that you can take your average payroll from any period during 2019. So you might can maximize your loan that way, except hospitality. So hospitality groups, so restaurants, bars, hotels, they actually are getting 3.5 times their average monthly payroll. You do have to have less than 300 employees. So if you're a little bit larger provider, big PAS provider, you might get excluded based on that. But here's where you must prove 25% drop in gross receipts during one quarter in 20 versus the same quarter in 19. So how do we do that? What that means, and let's talk about gross receipts real quick. So it is going to be depending on if your cash basis or accrual basis. If your accrual, it's going to be your billing less adjustments. Okay. So it is actually net revenue. If your cash basis, it's going to be what you received that month, right? I could see that maybe second quarter or maybe third quarter might have been worse in 20 than it was in 19 for some providers. So that's what you want to do, is you want to review quarter by quarter by quarter and see which one allows you to meet that requirement if you need these additional funds. Now, I don't think I put it on here. Let me finish these last couple. SBA, so you know what, Merlita, I'm betting the form is not even out yet to apply, because it does say that SBA is going to issue guidance within 17 days. I've seen that in two. I saw 17 days and I saw 10 days. So I'm not sure which one's right. So I think when they come out with additional guidance, that's when the form will probably come out. Schedule F farmers are now eligible, and that's been clarified. And also 501c6 entities are eligible, with the exception of sports teams. And I noted that because that is our very own beloved TAC organization. They have been excluded. So they were never able to take a PPP loan. And I think they've been impacted. And so now if they meet these other requirements, they're included as well. Okay, before I go on, shoot. I had a thought and I wanted to wait because I thought it would be on the next slide. Well, it'll come back up. Let me answer a couple of these questions. Ernest asked, if submitted forgiveness to bank and is still in review, can we pull our forgiveness back and then can we resubmit the new one-page forgiveness? You probably could, but I don't know what the point would be to doing that. I don't know what the advantage would be for you. But you might, I would ask your bank. If you wanted to do that, I would ask your bank. Clayton, hey. Hi, Clayton. The question is, what if I acquired a new business this year? They came on board November 1st. Let me look into that. There are some rules for new businesses, but I feel like it said, I'm trying to remember what I read. Bob, if you can help me out, and if you know, I feel like it said if the business was not in operation prior to 2/15, it does not qualify, but I might be wrong. Now, here's the thing. I happen to know this situation. That business was in existence. So interesting. I don't know. Let's look into that, Clayton, and see what we can come up with. And I feel weird taking notes while I'm on a webinar, so remind me that I need to do that. We'll look into it. Okay, so next little gift that they gave us is the EIDL grant. If you applied for that EIDL grant in the very beginning, it was $10,000, and then they said it's $1,000 per employee up to $10,000. So you might have got $10,000, you might have got, it depends on what you got. If you applied for that, and that was basically you were going in saying, hey, I'm interested in an EIDL loan. And they said, oh, do you want this grant, this advance? And you said yes, and you got the deposit. You did nothing but get a deposit for that other than submit like an inquiry online. If you got that, that originally was to reduce your PPP forgiveness amount. So if you got 10,000, your PPP loan was 300,000. You spend it all appropriately. You've got 300,000 of forgiveness. Well, not exactly. They were going to shave it back by 10,000 because of the EIDL grant. That is gone away. The EIDL grant no longer reduces your forgiveness amount, and it is in no way taxable either. So that's another little kind of bonus for everybody if you got it. If you already, Pamela, that question scares me because we can't even get done with what we have, but I'll answer it in just a second. If you've already filed for your forgiveness and they excluded the EIDL grant, that needs to be refunded to you. It could, because you may already be making payments at the bank on the $10,000. So you need to contact your bank and see what needs to happen to get that undone. So if you've already received forgiveness and it was reduced by the EIDL grant, contact your bank. Don't assume they're just going to start sending it back to you. I would be vigilant on that, and I would be the aggressor and go after it and make sure you get your money back on that. So real quick, Pamela asked, will our team be helping us with the paperwork of a new loan? Yes. Somebody's going to have to send Courtney on a vacation if we ever get out of all of this, because bless her heart, she is on it and she's handled them all. And we've done a lot. I think we have about 70 forgiveness applications that we're working. We've got most done. I think we got about 24 left. And then jumping into HHS Provider Relief Fund, she's doing all of that as well. So anyways, and taking care of Clayton and Aaron, who never shows up for my webinars, but that's okay, because then he just wants me to relay it all to him later. All right, so I'm relying on other experts to pull this information. I went to NAC and TAC, and Mueller Prost is great at it. And so I'm kind of copying some of their stuff. So healthcare specific items, this is great. And I cannot say this word properly. The Medicare, the sequestered Medicare amount, that 2% was supposed to, so they temporarily held off on that. So they quit withholding the 2% sequestration. They temporarily did that. It was supposed to expire 12/31. They're going to keep that temporary suspension until 3/31. So 2% sequester is not coming back until 3/31. So that's nice. Medicare physicians fee schedule is temporarily increased 3.75%. Probably doesn't impact a lot of you all, but I, again, wanted to share. And then new definition of lost revenue. This is a huge victory for all of you. And this is like, I feel like whiplash, especially on this lost revenue. So Bob, this is kind of a big, we talked, just by the way, guys, Bob Patterson is a CPA buddy friend of mine, and he does a lot of restaurants, but he has one that's a behavioral health clinic. So I've been helping him on this stuff with these. That's why I keep referring to Bob. And he's in my little group of CPAs, and he's cool, and he's a pilot, and he's got a really young wife, and stuff like that. I mean, she's not young. She's young, but she's a lot younger than he is. New definition of lost revenue is a big, big deal. Basically, they went back to the original definition. And so what that means is I copied and pasted, and I'm not going to read it to you. In the beginning, they said, oh, lost revenue can be lost referrals, lost admissions, people declining services, elective surgeries getting shut down, and therefore, your referrals from Dr. XYZ shut down. It was, and it also talked about, like, you could even use like budgeted numbers versus actual. And that was very, very favorable. And everybody was like, cool, because you could justify that. And you could, I still told people, you got to go to the measure of actually measuring this and documenting it and saying, okay, in January, we had this many admits or referrals, and then February referrals, and March referrals, and then April referrals, and then May fell off, or whatever the time frame was. But what happened was in late September, October, they started coming in and saying, no, that's not what we meant. First of all, they said change in net income, loss in net income. Then they said, well, we don't really mean net income. We mean net revenue. And so what you had to do was say, okay, my revenue dropped from 19 to 20. And for a lot of people, that was not the case, especially if you were a scaling business. Like you could have been doing this for 20, and yeah, your business dropped off, but it didn't go less than where it was in March of 19 because you've been scaling for the whole time. And so that was, I mean, pretty kind of unfair, I guess. And so I guess they got a lot of heat. I guess we have really good lobbyists. I don't know how this happened, but they did revert. They reverted back. So we can go back. Honestly, let me see if I put a slide in here. I did not. But my first slide, I went and copied my slide from July that explained lost revenue. And again, it's loss in, if you can document loss in admissions, referrals, not taken under care, budget versus actual, you really got to document it, and that can be lost revenue and help you justify the HHS provider relief funds that you were given. Now, these funds were never tax-free or expected to be tax-free. They will always be included as income and taxable in that way. Adrian, yes, slides will be available for download, and you'll get an automatic email tomorrow that has the link in there of the video recording of the webinar and the slides, even though I don't feel like they are my best work product on slides. Targeted distribution, this is for you larger groups. The act, it kind of clarified, and it made it to where, like, if you are a group and you can spread your HHS money around however you see fit, you can allocate it to subsidiaries. The only catch is whichever provider receives the money has to account for all the money. Now you can do it with, I sent this much to this sub and that subsidiary, here's how they spent it. So you're really going to have to keep some detailed records on how the money was spent by each subsidiary and do your reporting. Tracking all your expenses is going to be very, very critical. But that does give you some flexibility. I have some people in mind I'm thinking that will help with. That's all I've got. That was kind of a lot. I went through it quickly. I say it's a lot, it's because there's still a lot we don't know. And really it's fixing a lot of what has been done in the past. So what we're hearing isn't absolutely foreign. It's more like clarification and fixing things that were already done. I don't have any open questions right now. Does anybody have any further questions? I will for sure be back on this in January. Maybe it's February, whenever we get better guidance and things are formalized and they're, well, let's get the daggum bill passed first of all. We'll do this again. It'll be with more structure and won't be quite so messy and frantic, but I just wanted to get the info out. I consider just recording a video, but I like being able to answer questions. I've got one, I'll answer that in just a second. And then I also wanted to tell everybody that's watching, client or not, what we intend to do because of the workload that's on us. And I'm hiring, if anybody knows accountants, bookkeepers, I'm hiring. But what we intend to do for HHS Provider Relief Fund reporting, for those interested, I am going to do a class. I don't think it's going to be super difficult. Of course, we got to wait until we see what it is, but I intend on doing an actual in-depth class, like an education on here's how you do reporting, so that for anybody that wants to do reporting on their own, I want to give you the tools to do that and make sure you know what you're doing. And that's just going to kind of help take some of the workload off of us, frankly, is what it's about. So I do plan on doing that. It'll probably be early February, unless the due date changes. Currently, that reporting due date is scheduled for February 15th. Again, I wouldn't be surprised if they push it back, but I also won't be surprised if it's stuck where it is. So I definitely plan on doing a just straight up class, not really so you'll do it yourself and take some of the workload off of us. I'm all about empowering you guys. Okay, so Keith asked, for the FTE Safe Harbor 1 calculation, do compliance with guidelines issued by, hold on, necessity. I'm writing this down because this is that thought that I was going to address earlier and it floated out of my mind. Okay, do compliance with guidelines issued by governor executive orders also apply along with sectors, HHS, CDC, or OSHA to qualify for the safe harbor? So Keith, I'll be very, very honest. We've been very aggressive with that safe harbor. We've not been challenged on it by any of the banks. There are some CPAs out there and probably some attorneys that are taking the stance that, okay, for the safe harbor of you cannot return to full capacity because of a compliance order or guideline being issued. They're taking the stance, hey, you're a healthcare provider, you're essential. That was never issued for you to stay home or for you to shut down. Therefore, that safe harbor does not apply. We're being a lot more aggressive. We're taking the stance that it does apply because it did affect you, because everybody else because your direct consumer was shut down and in home and refusing your services because of stay-at-home orders, that does affect you. So I'm just being honest that we're taking an aggressive stance on it. We've not yet been challenged, but depending on who your CPA is, who your attorneys are, how big you are, if you're, a large and also what your risk tolerance is, that may not be something that you're comfortable with. So you might need to be careful with your FTEs. What we do know that I did not put in here, FTE count. One of the big questions was the way it was worded was funky. So, okay, if let's say my period ended, I went 10 weeks, my period ended on 8/15, but the way the regs read was you had to maintain your FTE 24 weeks or until 12/31. So it was like, do I have to maintain that full head count till the end of my period, till the end of 24 weeks? Or till 12/31. That has been clarified. It is only the end of your period. So if you maintained up and through your period and then you terminated after that, you're good. Now I know this is kind of hindsight and it's probably past the point of when you were making those decisions. Now another thing, and I don't have the information right in front of me to dig into the details right now, you can spend your way out of an FTE haircut. If you go longer weeks and you, or even that last week, say you need 10,000 more to fulfill your forgiveness expenses, but that payroll was 150,000, include it all on your forgiveness application. And if you have a 5% reduction in FTE, so you get a little 5% haircut, because you spent so much more, it will reduce that haircut. It'll make it go away. So you can kind of spend yourself out of forgiveness. I mean, it depends on how drastic that FTE change is, but we have done some of those as well. So I'm not sure if that answers your question directly, but I'm sharing what I know and how we've been handling it. I've got several that say they're very interested in a class. When will you believe banks will be accepting second round of PPE? Great question, Christine, and we do not know yet. I think it's not going to be until they said SBA is going to put out more guidance in 17 days. So I bet it's going to be mid-January before they start accepting applications, because I think it'll be around that same time. But I can, and back to necessity, but I'll ask our big banker, Vesta Bank. So when for PPP2? And then necessity. Necessity It's going to be a big thing on this second round of PPP. And I need to research it, but there's a lot of chatter that the necessity could be very strict, and it says that you need this to continue operations. That might also reduce some people, but I need to see that for myself and see how that's worded. So make sure if you're looking at doing a second PPP loan, that you really understand what that necessity that you're signing penalties of perjury on, make sure you understand what that is. So I need to look at that closer. If FTE drops after PPP forgiveness, will that affect our second round of PPP? Louise, that's a great question. Because what I'm wondering is, let's say it dropped, right? You're done with your first round and it drops. When you go to ask for forgiveness on the second round, I'm assuming, and we're going to have to see it, I'm assuming it's going to say, okay, when you took out this loan, this PPP loan, what was your FTE and what is it now? I would think that you would just need to maintain FTE for that second covered period. But I don't know that. But that would be my thought, Louise. That would be my thought. Great questions. Okay, and then please explain forgiveness due date again. So the forgiveness application, it depends, Francis, it depends on your covered period. Whatever you calculate your covered period to be, so another way of saying it, whenever you spent the last of your PPP loan, 10 months from that date is when your forgiveness application is due. I would not wait that long. But if you got your loan in May, June, July, if it took you 12 weeks to spend it, somewhere in July, say July 15th, then 10 months from July 15th would be May 15th of 2021, something like that. So it's 10 months from the end of your covered period. All right, everybody. That's all I've got. I appreciate everybody staying tuned in, and let me know what other questions come up. Merry Christmas, Happy Hanukkah, and Happy Holidays to all of you guys. We'll be checked out for about a week and a half. And so, but we'll be back. We'll be back hitting it hard come January 4th. I wish you guys all happy holidays. And I look forward to seeing you all again in the new year. Thank you guys. I need that little button to cancel Zoom. Where's it at? Here we go.